story forward. Mr. S.K. Ghosh, Group Chief Economic Advisor with State Bank of India, joins us now. Mr. Ghosh, good morning and thank you for joining us. Uh, the cyclical recovery is confirmed, Mr. Ghosh, if I look at the headline number. But the minute I look at the breakup, the puzzling aspect for me is that why has agriculture growth made such a strong comeback?
No, I think that's a very good point. There are three elements to this number which came out yesterday. The first number is obviously the agricultural part. See that actually the market and even all of us were expecting the agricultural sector should see a sub 2% growth, but this 4% growth is primarily on account of the non-food grain component. If you break down the agriculture, the food grain component only constitutes around 59%, and the non-food grain components like the livestock, forestry and fishing constitute around 41%, which has shown a very strong growth, and that has pushed up the agricultural number. So I think that's the reason between why agricultural growth rate has done quite well and much above the market expectations.
Why do you think the core data is suddenly looking so strong, and do you think the sustainability of the core data, given where the fiscal deficit number is, which will automatically ensure that government spending will remain low in this quarter, the entire pickup in core data may not sustain?
No, I think there are two sides to the core data. If you look at the core data which came out yesterday for the month of January, I think cement and steel output continues to remain strong. In fact, cement dispatches, cement has now posted a 20% growth in the last month, and that is why you will see that the construction sector growth rate has now reached a 24-quarter high. This is basically the highest growth rate, I think, from the Q2 or Q3 of 2011-12. So that's a positive sign. But the other thing which I am talking in terms of the fiscal deficit also, if you look into the fiscal deficit and the government spending, even though the capital expenditure the government has declined last year, I mean this year by 1.6% as was stated in the budget, but I think some element of this increase in government expenditure is visible in the capital formation. There is an, I mean, even though on an yearly basis it is going to decline, but on a quarterly basis it shows that some amount of capital formation is happening, and that is actually happening in the organized sector, which is a welcome trend. So we expect that even though there could be some pressures on the fiscal deficit, but the revival in the investment activity, even though on a moderate scale which has started to happen in the beginning of this year, should continue for a while given the current trends of government expenditure.
Mr. Ghosh, from a market standpoint, although the government consumption has picked up, private final consumption is yet to see that pick up. What's the way forward, and when can we expect a consumption in the private sector as well?
See, if you look at the expenditure side, yes, the private consumption expenditure is supposed to slow down in this year. I think from a trend growth around 6.5 to 7% in the last couple of years, the growth rate could slow down to around 6%. So that's a cause for worry, and the fact that, so that is one of the downsides to this current recovery. So if the oil prices continue to stay high, and given that the current financial sector market developments, I think that could act as a constraining factor on the consumption growth. But if the rural story continues the way it is continuing right now, and if you have a good monsoon, that could have an impact on rural sentiments, and that could act as an important factor which could lift the consumption story. So in my sense is we are now standing at the juncture whereby both the factors are playing out, and if a good monsoon plays out in the current year, I think that could have a favorable impact on the rural market and also on the rural consumption side.
That 7.25% is the new normal, and this recovery that we've seen in the GDP data is sustainable.
No, I think, so there are two parts again to this number. If you look into the GVA number and the GDP number yesterday for Q4, the gap between the GVA and the GDP is actually 50 basis points. So I don't see this gap will be sustainable going forward. So that's why the even though the quarterly numbers show a 50 basis point divergence between GV and GDP, but the Q3, but the overall yearly growth shows a 20 basis point difference. So I think going forward, we can see possibly a 7% growth or a 6.9 or 7% growth in Q4 in terms of the GDP number, but in terms of a continuous 7% growth, we may have to wait for 1 or 2 quarters more.